The idea should be to try and focus on specific stocks maybe,
yeah,
which might react. And it's a bunch of them today, actually.
Yeah, quite a few.
Yeah.
I don't know if they, how much reaction you will see, but we'll just lay out for you where the interesting stories are and the news flow that you should keep an eye on. So first on my list is Mazagon Docks. They've started production of patrol vessels. They've commenced production activity for their first fast patrol vessel, and they've started the plate cutting for the second ship of NGOPV. That's the next generation offshore patrol vessel. Both are part of their contract with the Indian Coast Guard. And remember that they have a contract for 14 fast patrol vessel ships, which is over 1,000 crores, and for 6 next generation offshore patrol vessels of over 1,600 crores, which is where they've completed the first one. Now, Mazagon also, apart from this one milestone that they have reported, I would say is in focus because you're going to see fresh budget allocations coming in. You're going into that season the next 3 or 4 months where defense will be once again in focus. So, and if you want to bet on the strongest of them, Mazagon is definitely one contender. Bharti Airtel is the other one. They have prepaid spectrum dues, 3,626 crores to the Department of Telecom, cleared all liabilities for spectrum acquired in 2016 and prepaid it with interest costs over 8.65%. Airtel has also prepaid so far 28,000 crores of spectrum liabilities in 2024. Just on that basis, it could be a sentimental boost. And the next one also I thought was interesting. I don't know if the stocks are going to move too much, but Exide and Hyundai Motors have signed a pact for battery cells. They've entered a definitive pact for battery cells for electric vehicles and signed a binding term sheet with Exide Energy Solutions. They had done this earlier with Kia, if I'm not mistaken, and now it's extended to Hyundai as well. And Hyundai has a pretty decent market share and wants to move ahead in the EV space. They will become the first automaker to offer made in India AGM battery technology to equip its domestic product offerings. And overall, auto might not be great, but maybe for Exide more than Hyundai, this could be some positive news.
Yeah. So, and the interesting thing is this other thing that they have done, right? The SLI battery piece is done with Amara Raja. Yeah. So it does seem like Hyundai is going with a multi-supplier approach, right? Yeah. For lithium-ion batteries, go with Exide. For this SLI, which is the starting lighting and ignition piece, go with Amara Raja. And therefore, maybe a victory for both today. Exide and Amara Raja, not as much for Hyundai maybe. But the interesting piece is Exide's plant, as per what a few people believe, is mid-calendar year 25. So let's say roughly about between Q1 and Q2 FY26 is when the plant commissions. Typically, the market tends to discount things 6 months earlier. One would reckon that maybe there is some excitement around this. And then as Exide gives more clarity, they don't talk per se, but as Exide gives more clarity in the con call or otherwise, there might be more details out there. But yeah, interesting announcement for both them and I. So, I mean, could well be the stocks to monitor today. So watch out for those for sure. 3 other small names to keep an eye out for. Now, one of them was BASF and BASF India. There's a demerger of a small unit within its overall ecosystem, agricultural solutions business. But it is a demerger, and therefore there might be some bit of a reaction. So keep an eye out for BASF India. Keep an eye out for a very small stock, Deep Industries. And they've won a very small order, but for Deep, it's a sizable order. And the stock has had a decent run in the recent past. They've won the order from Ceylon Exploration Technologies. It's 62 crores to be done, but the stock has had a really strong run in the last 6 odd months. Let's see if there is more in store, but watch out for this one. And I'll watch out for Zomato amongst everything else. I mean, inclusion in the Sensex, there is a bout of passive flows that will come into Zomato. And yes, JSW Steel could get punished as well, but Zomato predominantly, passive inflows of $500 million. And I don't know, to my mind, and yes, Zomato has been expensive, you could argue, and Swiggy wasn't, but with reason. But I don't know, yesterday it just felt that if you put up the 2 charts, Swiggy's outperformed Zomato by a country mile in the last 30 days.
Stock price?
On stock price. Is it time for Zomato to switch over and take the lead? And does this help Zomato take the lead? Passive flows, etc., excitement back. Maybe it makes it egregiously expensive, but hey.
I think that the reason why Swiggy has outperformed in the last 30 days is this constant narrative, right? The dark horse. Zomato is now too expensive. Swiggy is not that far behind. They're doing some of the same things, so it's the cheaper option between the two. So I don't know if that switches either. But